she's talking about taxing unrealized gains. So at the same time, the Democrats are talking about how important homeownership is. Realized gains would mean on investments would also be your house. So say you buy the house for $100,000. Next year, the house is worth $150,000. So now you're going to get taxed on that $50,000.
So you've probably heard about Kamala's unrealized capital gains tax that this piece of boot leather stretched over a mannequin wearing a blonde wig is talking about. You know, the one conservatives keep freaking out about. Sorry, I guess I should be more specific. They freak out about everything. But like the end goal of Buffalo Bill here, most of them are freaking out about the unrealized capital gains on your $100,000 house. And by the way, Nevada, that thing there is one of your state reps. Just thought you should know. But yeah, they're all freaking out about how Kamala's unrealized capital gains tax is going to make you pay unrealized capital gains on your $100,000 house. And there's a few problems with that. First is where are you finding a $100,000 house? Inquiring minds want to know. Second is that you already pay a tax on the unrealized capital gains of your house. It's called a property tax. Third is that if you live in a $100,000 house, the last thing you would ever need to worry about is this proposed unrealized capital gains tax. And that's because it only applies to people with a net worth over $100 million. And if you're living in a $100,000 house, I'm feeling pretty confident in assuming that your net worth is not $100 million. And then even if you did have a net worth of hundreds of millions of dollars and still happen to live in a $100,000 house, you still wouldn't be getting taxed federally on the unrealized gains of that $100,000 house. And that's because it's only taxed on tradable assets, of which notably real estate is not. And on top of that, 80% of that $100 million net worth has to be in tradable assets. So if you're a real estate investor worth over $100 million and most of your net worth is in real estate, even you won't be subject to the unrealized capital gains tax. This unrealized capital gains tax would affect like 0.0002% of all people in the United States. Some of the people who know this and are still trying to criticize the tax because they're like, oh, it'll ruin the economy because investors won't want to hang on to long-term investments because they're going to be taxed on these unrealized gains. Well, I don't know how to explain this to you, because if you genuinely believe that 0.0002% of people potentially not hanging on to all of their stocks long-term would ruin the economy, there is absolutely no words that describe your levels of delusion. And again, if you think that wealthy people are going to change up their investing habits because they might have to pay a little bit in taxes on those investments, you are more delusional than Sarah Winchester's architectural aspirations. Like, if you're buying stock that's going to increase $1 million in value, but you're going to end up having to pay $250,000 of that million in taxes, you're just going to be like, nah, instead of increasing the value of my holdings by $750,000, I'm just going to increase it by 0 and not buy the stock. This is just such a dumb argument that is always brought up when it comes to taxing the wealthy. If you tax them, they won't invest in stuff and create the gerbs and whatever. It's just historically not how that has ever worked. And logically, if you take 2 seconds to think about it, no matter what rate they're taxed at, they're still making more money than the $0 they would have made not doing it. There was over a 90% top marginal tax rate in the 50s and 60s, and rich people didn't stop doing rich people shit. See, the only thing that this unrealized capital gains tax on stocks would do is marginally close a loophole that the ultra wealthy use to not pay taxes. See, the ultra wealthy tend to keep the majority of their net worth in stock portfolios. And as long as it stays in stock form, they don't have to pay taxes on it. See, now when they sold it, they would have to pay capital gains tax on whatever money they made on it, which would be fine if rich people ever sold it, but they don't because they don't have to. See, what they do is they go to the bank and they get a loan for whatever amount of money they need for their walking around money, cash, living expenses, all of that. And they put up their stock holdings as collateral for those loans. And now their stock portfolios tend to increase in value at a higher rate than the interest rates on those loans. So doing it this way is actually making them money. But if that wasn't enough, then they get to write off the interest on those loans. And they just do this in perpetuity so the stocks never get sold and they never have to pay taxes on the vast majority of their wealth. Also, a lot of CEOs are paid in stock options rather than cash. Once again, meaning they don't have to pay taxes on the majority of their income. And because you have to be stupidly wealthy to play this game, and the wealthy for obvious reasons tend to try to convert all of their cash and income into stocks that then for obvious reasons they rarely sell, 93% of all stocks are owned by the top 10% of wealthiest people, meaning that the stock market is one of the least equitable measures of economic health, and why the stock market can be doing absolutely great while you still struggle to buy groceries and pay rent. So worst case scenario, if this tax ever got passed, because it would have a long uphill battle to get there, stock buybacks start to lose just a little tiny bit of their incentive. Not very much, but a little bit. A few super rich assholes might have to pay a little bit more in taxes that they currently get to avoid, and it would give those rich assholes just a little bit more of an incentive to diversify those investments outside of the stock market, which would be good for the economy as a whole and all of us regular working people, and it would make the stock market a little bit more equitable by giving the ultra-wealthy adjacent assholes a little bit more of a competitive edge against the ultra-wealthy assholes. So if you're worried about this tax, you're one of two people. You're either too poor to give a shit about it, and no, that's you, I'm talking to you. If you're watching this video, you're too poor to fucking care. If you're not, then you're too fucking rich for it to ever fucking matter. It's not going to affect your life at all. And let's be real, if you are that rich, you've been living as a parasite on society's ass for too fucking long as it is. And even if this passed, you'd still be living as a parasite on society's ass, just sucking microscopically less of its lifeblood out of it. Here's the thing, for most working Americans, our homes will be the biggest investment we ever make in our lives and account for the majority of our net worth. We pay unrealized capital gains taxes every year on that investment in the form of property taxes. So if it's okay for us peasants to pay unrealized capital gains on our biggest investment in our lives, there's no reason a few wealthy fucks shouldn't be able to pay unrealized capital gains on theirs. Stop simping for the slave masters. They don't fucking need your help.